Hey everyone, welcome to another episode of The Executive. Excited to be joined today by someone with multiple experience in a lot of different roles and is doing something really unique right now. Was the COO of Glue at one point, the digital, I believe GM, global GM of WPP, and is now on to his next role as the CEO of Rook Capital, which are really going after something that maybe is one of we have a lot of a lot of issues in the U.S., a lot of good things going on as well. But one of the biggest problems we're facing is just home affordability and making sure more people have the equal opportunity to own a home. So I'm really excited to be joined by Ed Messman, who's the CEO of Rook Capital. Ed, great to have you here today.
Thanks, Matt. Really great to be here. Thanks for having me on.
Absolutely. Well, let's just hop right in. As I was saying in the intro, as probably we've seen in the last couple of years, things maybe have cooled down in the last few months, but we've just seen housing prices, skyrocket. And you're really trying to tackle this problem where, on one hand, it's great because this is, so for a lot of people, it's their biggest investment to see that investment do well. But unfortunately, for a lot of people, that means they're getting left behind and can't even, entry point is just getting too high for them to ever own a home. So love to hear how Rook Capital is solving for this and where your whole team got excited about this problem to try to tackle it.
Yeah. Well, I'm new to real estate. So as we got into the problem, I had to kind of really learn how the whole housing finance industry worked. And fortunately, we've got a good team of friends and colleagues who are now advisors who helped us early on. But if you think about what you just said, most Americans have their net worth tied up in their house, right? And that I think any investment advisor, they probably say that's probably not a wise idea to be so concentrated. I think that the current construct of housing, the 30-year mortgage, was designed to be a forced savings program. And that really hasn't evolved much over the last, few decades. So we looked at a couple other things. One is just this generation, they think differently. I've got 3 kids, 22, 21, and 18, and they think very differently than I did growing up. And ownership is a very different construct for them. They grew up sharing things. They grew up in an Airbnb economy and an Uber economy. So they're just more comfortable. And these concepts take years and years and generations to finally mature and evolve, big industry like real estate. But the idea is that how can we help more people get into home ownership and reduce the amount that they have to finance to get into a home? Because that's really the driver. When you go to a bank today and you get a mortgage, it's usually 80%, 95% of the home if it's an FHA loan. That bank generally 9 times out of 10, they sell that loan to Fannie, Freddie, Ginnie, FHA, and then those institutions, which are government sponsored enterprises, they package them up and sell them in mortgage-backed securities pools to Wall Street. And so we looked at that construct and we said, what if we created 2 things? What if we created an instrument that allowed investors to partner with home buyers? And by doing that, it allowed 2 things. One is it allowed the home buyer to finance less of the house, but still enjoy everything about home ownership. They're on title. They get to live there. They can do whatever they want with it. And
they can decide when to sell.
They can decide when to sell. There's no difference, except for the fact that you have a silent partner that at the same time is investing alongside you in that house and gets an equity ownership in that house, and helps you get into that house by allowing you to finance less of it. You don't own 100% of it. But what if it allowed you to save, hundreds of dollars every month that you could redeploy into other areas of your life, which may include investing in the stock market or saving for a college fund or paying down, student loan debt, whatever it may be. So you can almost think of it as we're deleveraging the U.S. consumer and their housing payment and allowing them to live with more financial margin in their lives by inviting investors to participate with them in the homeownership journey. And so that's what we created. It is a big marketplace, as you know, and it's highly, highly regulated. And so we've had to navigate a lot of that complexity. But we're excited about the narrative of helping this generation, which, as you know, we all read the same headlines. They are being forced to rent longer and longer because they can't afford to buy a home. And I would say, I'm 52 now, I would say if that happens, like if this generation ends up renting for 5, 7, 8 years longer than they ought to, than my generation did, that probably doesn't bode well for the next generation of the middle class of the U.S. And so we think that there's a model that can help this generation get into more affordable housing.
Yeah, it's interesting. The original thought when I was reading up about what you're doing was, for sure, it makes sense for a lot of people who can't afford the down payment, right, to get help from the investor. But it's also should they really be putting that much money towards real estate when they're not putting money to anything else, right?
Yeah.
You're helping them to spread out their risk a little bit. What I'm curious about is for the investors who are investing alongside of them. One nice thing of investor is when you buy a house on your own, or let's say you're buying just regular securities, right, or just stocks, you can decide when to sell. But what it sounds like is you don't really. If this person that you're investing alongside with decides to be in their home for 5, 7, 10 years, is that money pretty well locked up? Or is the idea that it's because it's in a huge pool, you can constantly see returns since there's such a big pool? Okay.
Yeah. There's two things there. One is, as an investor coming in, you have to take an initial investment thesis that you want a long-term position in single-family residential real estate in whatever markets that we're serving. Today it's Colorado. We'll open up new markets this year. So you have to think about holding that for a period of time. Now, the benefit of a pool is that you may have early redemptions or people selling 3 years versus 8 years. So on average, it'll be less than the 10 years that our investment is locked in at. The second thing is we're building the infrastructure for a secondary market. So if you invest in the pool, let's just say you need liquidity in 3 years, you could say, okay, I want to sell some of my shares in this pool on a secondary market. And so it's this idea of creating liquidity in real estate that doesn't exist today. And you'll see a lot of this year and next year, where big asset managers are starting to tokenize their assets to allow them to trade on a secondary market to a wider audience of investors.
So you're saying if you were in the first fund, or not really a fund, but you're one of the investors, you own somebody of these houses, and it's still a pool, right? Regardless,
it's still a pool.
It's still a pool. You can then say, hey, I want to sell out of this. I want to get some return now because I want to go invest in something else. I can come along and say, great, I'll buy you out at this price.
Yeah, there's
which is determined by Rook Capital.
Just like it'll be the market. So Rook may say, hey,
interesting.
The price is 100, and you may say, I'm willing to sell for 101, and the investor may say, you know what, I'll buy it for 100.5, and you can just like you would an Amazon stock, right? You set the same limits.
Anyone can decide. Right.
Anyone can decide. So the market makes the price. We will provide a net asset value of what we think the price is worth, but that's based on some model that we license, and so the market will determine what they think the price is worth. So as an example, if you know something about Denver, which is where you're located, let's just make something up. If you knew Google was about to announce 1,000 new people to move to Denver for a new office, you might say,
is that true?
Well, I'm
just kidding.
You should know this.
I'm just kidding. Yeah.
Then you might say, "Boy, I'm gonna be bullish on real estate in Denver." Conversely, you might say, "Hey, I just heard that Google's moving out, and they're going to vacate 500 jobs." You might go short on Denver, but the same
It's like an index fund.
Yeah, it's like an index fund. Yeah.
Yeah. That's super interesting. So that's fascinating for the investor, opportunity. One, you're like, and I like how your website lays it out. It's a great opportunity from an investor, but it's also like you're doing good, right? You're helping people get into homes, which at the end of the day is a huge part of the human experience and life. on the actual buying a home, what is like how much affordable does it make it? And so if they're going to put down 5 or 20%,
Yeah.
what are they able now to put down?
Yeah.
What's
So
the difference?
today we have a couple programs, one of which is a 5% and a 10% down program.
Okay.
They're slightly different, but they're the same kind of essence. Depending on which program you use, we work through the existing channel of realtors and the mortgage lending ecosystem. We have partners on both.
That's cool.
And depending on what your profile is, for first-time home buyers, a lot of them use FHA, an FHA loan, which is 97% financing. And with that comes a few strings. You have to pay a higher insurance rate, and that just increases your monthly payment. So effectively, what we can do is if they bring 5% down, we will bring up to 15% down, and that moves them away from any mortgage insurance. And then our lending partner will do 80% loan to value on the house. So effectively, two things: one, you're avoiding the PMI, which is the
it's pretty costly,
and you're financing less of the house.
Yeah.
We have a bunch of different models, anywhere from saving on an average home in Denver, which I think is $620,000, something like that.
Yeah, crazy.
Yeah, you could save $800 to $1,200 a month with our program. Now, the program doesn't fit for everyone, but for a lot of people, it will allow them to get into a home, set some roots, start to save money where they can kind of redeploy it or build a 90-day savings plan or something, and have a little more financial margin in their life. And so that's kind of the path that we're focused on. Is we think there's a number of, I would say, the first time home buyers, 28 to 35-year-olds in that season of they're just starting their homeownership journey. This is an option for them to consider.
Are you filtering out people who don't necessarily need this? Let's say a multimillionaire says, I don't really want to put down X%. I'd actually rather use your program and put my money elsewhere. Can he use Rook Capital?
Yeah, they can use
anybody can.
Anybody can.
Super interesting.
So we have had some folks that said, hey, I don't want to deploy, I don't want to touch my other assets. Right. I'd rather keep those assets performing where they're at and then just share some of the equity. Or I'm going to save some of my cash to do home improvements after I buy. And so I'm willing to give you some of the equity and use my cash that I have on hand to buy the place with the down payment. And then it's
a really cool idea. I'm sure the actual execution is super hard, but
there's a lot of moving pieces, which is why we said, hey, we have to slot right into the existing process. We can't make any new moving parts because there's already a lot of moving parts. So we rely on our partners, the realtors and the mortgage lenders, to drive a lot of the same process, and we just kind of slot into that whole workflow.
So you said before pretty well, you're new to real estate. What made you want to get into this then?
Yeah,
and be the CEO.
Yeah, it's I mentioned I've done this for a while. So in your career, you kind of look for those opportunities that have the opportunity to make a big impact. So it's a big market, and it's one that was intellectually challenging, and two, where you could feel like you could move the needle in your career, right? And so this one lined up a lot of those for me, and it just felt like we had a couple of at the time we started thinking about this. We had a couple of situations where this would have been a perfect solution for someone to use, and it just didn't exist. And so it just occurred to me that it feels to me like the housing market has about a 5 to 7 year tailwind on housing affordability until supply catches up, because supply has been really the biggest contributor to why housing prices have been so high. And that's not going to correct overnight. You just can't create new houses that fast. And all the data I've seen suggests that we're going backwards, not forwards in that regard. So it just felt like this generation, is a big generation. They're way behind on home ownership rates relative to my generation and the generation before. And they are facing a daunting reality as they start to think about setting roots and just think about starting your family. How many years you've been married?
Oh man, 6 years.
6 years.
6+ years. Yeah.
So my wife and I got married when we were 26. We had our first kid at 30. So you're kind of in that season of life where you're like thinking about your family. It's like, oh, I want to set some roots. And then guess what? When they start getting older, you think about school districts. I never thought about that. And you're like, well, we should buy a house to make sure we're in a good school district. All these things that it feels like we're in a season where affordability is going to be an issue.
Right. No, totally. It already is. And now you got institutional investors coming in to buying homes, right? And they're buying mass amount of homes, making it even tougher for affordability and constantly bringing less supply to the market, right? Yeah. So that'll continue, I see.
Well, I think that's another contributing factor to housing prices is that those buyers tend to overpay. But at the same time, I keep track of this. I think they will be quick sellers if the market starts to slide, right? So I think we could all agree that it's our communities that are consumed by institutional investors, home ownership, probably not good, right? Yeah. You probably want young families to be homeowners in your community, raise their kids in the community.
It's a different dynamic.
Yeah, and listen, at the end of the day, rent is, we're not going to displace rent ever, right? People need to rent. People will always rent. Some people will have a gift from their mom and dad or a rich uncle that allows them to put down that down payment. A lot of people don't have the rich parents or the rich uncle, and they need help. And so that's where we step in. And the fact of the matter is, I think Fannie suggests there'll be 4.2 million home purchases in 2023. Some people say that'll be half, but 2 million people, this gets back to how big the market is. We don't need to move the needle that much to make an impact, particularly in Colorado. So we're focused in Colorado right now, Boulder, Fort Collins, Denver. We're looking at the mountain communities that have unique problem sets too.
Yeah, it's pretty cool what you guys are doing. I do want to talk about your background as well, because you've got a lot of experience across a lot of different roles. You've got CEO experience, from Glue, and like I was saying, you're the head of the GM for WPP for a while. You have some CEO experience. You were in banking, right? And so you've got so many different experiences. Generally, it'd be interesting to just understand what really, how did you get into so many great roles through your career? How did so many different opportunities come knocking, or how did you go find them?
Yeah. I viewed the first half of my career, and it kind of splits this way. My first half of my career I spent in finance, banking, venture debt with a few different firms, and I would say that was my training ground. I got to see a lot of different companies. I got to structure a lot of different financing instruments. And I also got to work through two bubbles, the 2000 crash and the 2008 crash. And so I kind of viewed that as my learning experience, my training ground. And then from there, it was a series of intentional progressive roles where I really looked at the size of the platform. And I use platform as an abstract word. It's like, how big of an impact can we make? Do we have the right team? Do we have the right, how big the market is? And do I think that we can succeed? And, you can look at each of those roles that I took as almost platform opportunities to make the biggest impact. And also it was a fastest path to learning as well. Because operating a company is very different than investing in a company. And I think that here I am on, my fourth or fifth startup, and you just learn new things every time. Everything's new, but you learn a couple of, shortcuts here and there, what mistakes try not to make again. And each time you get a little smarter. But I will tell you, you discover new things with every startup because every startup's got a different,
right?
macro market environment. So it gives you a little bit of wisdom, but I think what it also does is it humbles you in a way that you can relate to your employees better, you can recruit better, you can engage your partners better. And so that's what I found over my last 15 years in particular.
When you would get into a new role, whatever that role was, did you do certain things to set up yourself for success in the beginning?
Yeah, I just because of my training, as a finance guy and working with startups for 13 years, I think it was just intuitive to me to understand every facet of the business. Like, what's the business model? How do we make money? Who are the main players that drive that for us? Is it development? Is it sales? Is it customer success? Is it finance? And so getting your arms quickly around all the levers of the business and what it was going to take to make it successful. And usually, because I usually work with startups, then you try to say, okay, now what are the capital requirements of the business? Do we need $5 million to get this off the ground? Do we need 10? Just depends on what the business model was. And I always, when I first started the roles, I would try to get a sense of how are we going to be successful? What resources do we need? And how do we go get them? And so that's generally what I found to be most successful. Because if you don't know all of those levers to be successful, then you're going to be operating, in a handicapped position.
Right. So first 30 days, just be a sponge, take in as much as you can, understand everything.
Yeah.
And then figure out what the strategy is from there.
Yeah. Understand the business model first, understand the environment that you're operating in. Are you in a red ocean of competitors? What team?
Time, peacetime.
Yeah. Right. Yeah. Exactly. Yeah. I mean, honestly, where are you at in the market cycle? And what team do you have to work with?
Right.
Yeah.
Through different roles that you've been into, you've obviously, I'm sure, learned so much about leadership, and you've seen the good, the bad from other people, then also from yourself and the best way to lead. Are there certain things that really stick out to you in leadership of like, man, that to me was like the best lesson in leadership and how to be a great leader?
I would say there's a couple. Some that were not great examples. I think you see a lot of times you see a lot of leadership by fear and tyranny. I say that kind of jokingly, but people that are heavy-fisted, right? Like you do it my way and don't ask questions. And I've worked for a number of those types of folks. Very smart and very driven, very successful. And I've also worked with other folks that are very transparent and very relational. And it's almost like, how do you blend them both? Because I think the people on your team, they want to be inspired. They want to feel like they're part of something that they can kind of get their heads wrapped around and feel good about waking up every day and going to work.
Right.
But they also want, my experience is they want someone that's going to be authentic, that's going to be transparent, relatable, but also they believe can lead to success because everyone can choose to use their time in many different ways, right?
Yeah.
Especially for startups. Startups are hard, right? It requires a lot of intensity, a lot of time and energy, and things are not perfect. They rarely are. And so it requires a unique person to be on board with you. And that person needs to be inspired, needs to believe that they can be part of creating something impactful and wants to kind of go down that journey with you. So I think that those are some of the attributes. You can't have one, you can't be on one end or the other. Like being right in the middle feels like a good place to be. But I've always led with transparency and authenticity, and sometimes it's burned me. I would rather defer to being fully transparent and relatable and authentic, and everyone knows what they're dealing with, and everyone's adults. Everyone are adults. They can make their own decisions on whether
they know what they signed up for.
They know what they signed up for.
Yeah.
Yeah.
It's interesting. Startups a lot of times have more transparency than, some of these big companies, and some of the really great leaders that I've seen, they're able to be slightly vulnerable or
Yeah.
very vulnerable, but still inspire their people, right?
Yeah.
They're not vulnerable to the point of like, oh wow, he was very honest. He doesn't know what he's doing, right? Like they still really inspire a lot of confidence, and I find that's a really hard blend to be
Yeah.
vulnerable, but yet still inspire people that you can lead them to the
Yeah.
water.
Well, and I think you made a really interesting comment. You can't be vulnerable and not know what the hell you're doing, right?
Yeah, good point.
If you're
Yeah,
going to be vulnerable, you have to, hey, this is the plan, and we're going
yeah,
to set a high pace, and we're going to execute. And I'm not saying it's going to guarantee success, but we're going to, we have everyone, you know what the plan is. I know what the plan is. Let's go execute the plan. And I think people can kind of get their head wrapped around that. It's like, okay, I think that makes sense intuitively, and I will get on board with that.
yeah.
Yeah.
You noted this earlier, and I'm sure there's a few scars, but were there a couple challenges that you went through that at the time I'm sure were super painful, but you look back and you're like, I'm really thankful for that experience. Like I learned a lot from
Yeah.
that.
I think I spent most of my career in tech.
Yeah,
And um, I think in software in particular, software's hard. And if you don't have a good dev team and a good product team, you can get bamboozled.
yeah,
And you don't know, like as a non-technical founder, you can't really assess whether or not you're making progress or not.
yeah.
And
You think
so,
things are working behind the scenes and they're
yeah,
not.
yeah.
Yeah,
So I've been burned a couple of times there. That's really painful.
yeah,
It's very humbling. And you learn to appreciate good development leaders and good product managers. And so that's one I think scars,
yeah,
a few scars there. And then I think also managing your burn rate early on.
yeah, yeah.
And
Super relevant right now, right? In
yeah,
this environment.
it is.
Yeah,
It is. And it's if you're established, it's really hard because you've got to cut expenses, and that's generally
yeah,
people.
right.
But in the early days of a startup, until you have really good product market fit, try to stay as lean as you can, because
Yeah,
inevitably what you think you don't really know until you get to
right.
market, right? And you have a point of view, and you have identified a market need, but you don't really know until you get your product to market. So I'm a big believer in speed. Like we move very, very fast, and a lot of times people get frustrated on how fast we're moving. But I'm also a big believer until you get your product to market, you really don't know what the fit's going to be.
Yeah, you
And
just got to get to market.
you just got to get to market. So
Yeah,
so we try to move as fast as we can, which has been hard here because it's a highly regulated industry. Like you can't take shortcuts on regulatory compliance, and
yeah.
so we've had to take our time and with good counsel to do what we're trying to do.
How do you balance, speed when you still want, maybe if you're a perfectionist or you're just really good at, what you do, and you take pride in good work, and knowing like you have to sacrifice a little bit of that for speed, that it may
Yeah,
not be perfect going out the door. And is it a
yeah,
little bit of just humility? How do you balance that?
yeah. I think you gotta focus on the right things and let the other things go. Like good is good enough.
Yeah,
And in fact, one of my favorite quotes is from Mark Andreessen. He says, "If you're not embarrassed by your first product, then you've launched too late." And so
yeah, that's a good point.
I think it's really a really good reminder that again, you can think you know what it is, but until you get it to market, that's when you get real market feedback.
Yeah,
And so we push pretty fast and hard. And I think as a leader, you got to set the tone. So you got to lead by
yeah,
example. So you're setting the tone for everyone else, and it just that requires you to work a bit more hours and
yeah.
be on top of all the moving pieces.
Is your number one focus then as the CEO of an earlier stage company just product market fit, figuring out what that is, and then scale?
Yeah, product market fit, capital management,
Yep.
and then the path to scale.
Yep.
And so, as you raise money from private equity or venture, you have to have your arms around some of these facets. Like, hey, we think that the product is this. Here's the problem we're solving. Here's a couple proof points. If you have some traction, here's how big that market is, and here's our revenue model, right? And then here's the team that's going to execute it. Those are the things you got to kind of check the box. But then you got to really focus on, okay, can we get this product to market? Can we be capital efficient? And then we're not interested in building this business to do 10 deals. Like, we want to do thousands of deals. So how do we think about getting to scale without building a whole big business?
Right.
Yeah.
That's well said. As we start to wrap up, I would love to hear what's the 10-year long-term vision for Rook Capital. What do you envision this? What's the long-term vision of what you can build here?
I think we are, and there's some recent posts from some smart, well-read and well-researched folks that have been recently introduced to the market. And I think that they talk about, we're on this evolution of ownership as a new paradigm. And as an example, just kind of a side note, I was describing what we were doing to my son. I have a 22-year-old son and a 21-year-old son. And I said, hey, could you take this back to your college roommates and explain what this is? And he said, well, I don't really know what a 30-year mortgage is. And I said, well, let me tell you what a 30-year mortgage is. And he kind of gave me a cross-eyed look, like, 30-year mortgage? Why would I ever be in a place 30 years?
Why would I make a decision for 30 years?
Yeah. And then as I continued to explain what we're trying to do, he said, wait a minute. What you're telling me is I could own 30% of 3 homes versus 100% of 1 home. And while that's not exactly right, it's directionally right? He's like, I don't want to just live in one place. So I want to own a couple different places, but I don't need to own 100% of it. I just want to use it. And I think you're starting to see models like that where you have co-ownership in something that you get high value utility out of, but you don't have to pay for it all. Right.
And that's probably such great feedback for you, of you're thinking he's going to come back with this, but he actually comes back with something totally different. And you're like, that's what your generation is thinking about.
Yeah.
And that's your buyer.
We got to stick around until he's ready to buy a house. So we got to survive. But I think the idea that we are entering a new phase of ownership, and that could be your home, that could be your car, that could be your boat, that could be a number of things. And secondly, I think the shared equity, we call it the shared value investment, but it's a shared equity financing instrument that invites investors who want to invest in that asset to participate with you. So introducing that financing construct to housing is our long-term vision. And then lastly, the impact of this, imagine if we can move 100,000 or 1 million new people that are just on the verge of being able to own a home, or just look at it and say, I don't really want to spend $4,000 a month on my mortgage because I live in a high-priced city of San Jose or Boulder or Austin, Texas, or there's probably 25 different cities that have now high-priced markets. I want to own, but I can't afford it. I'm not willing to compromise, being financially over leveraged to do it. And so, we have a goal of moving, obviously, thousands of first-time home buyers and second-time home buyers into homes.
Messman. I'm going back to your earlier comment of what he said, because it's really stuck with me, that the new generation is more like, I don't need to own 100% of my home. I would rather just own several homes and maybe, move around, whatever that looks like. I don't know. Right. Like, I'm so used to just wanting that be in one place. Yeah. But it's the whole Airbnb thing.
It's going to take time. And I'm not condoning him to own 3 homes, because you got property tax, you got maintenance, you got insurance, right?
Yeah.
But
you don't want to get into that all that.
But the models that will emerge to meet that kind of need and to lower the costs of housing by doing that and inviting other investors to participate with you, that just seems like it should work. But we've got some work to do to make it happen.
It's pretty cool. Um, well, through your career, I don't know if you're an avid book reader, but I'm sure you've read a book or two. Is there one that really stuck with you as super helpful in your career that you'd recommend other people?
Yeah, well, you're right. I've read a bunch of business books, and I think the longer I've been doing this, the one book, there's a couple books, but there's probably one book that comes to mind. It's called The Monk and the Riddle. Have you heard of it?
I have heard of it. Yeah, I've
Okay.
never read it though.
Yeah, I think the essence of that book was almost, if I could roll it up to the highest level, it's like, hey, you're in this startup, you're in this business, but it's a long game. Like I'm going to probably do something after Rook. I've participated in 8 to 9 different companies. It's a long journey. Like you have a long career ahead of you. And in each one of those companies, you're relating to and treating people uniquely, right? You're establishing relationships, you're hiring and firing, you're promoting, you're mentoring. And I think that in essence, it says, don't compromise on delaying what you want in life for the sake of the intensity of this particular moment in your business, because it is a long game. And I think in what I've experienced is there's many people in my network that I've worked with 7 years ago, 8 years ago, that I'm working with again today, and that's because of the relationship that we had 7, 8 years ago. And I think just like you're going to have relationships that will re-intersect your life in 5, 10, 15 years that you don't know. It's enjoying the journey of life, being a leader that treats people with respect and authenticity, and recognizing that life is more than just this business that you're working on, right? It's your wife, it's your family, it's your friends, and your own kind of soul.
Well, it's probably a little bit of being in tech. You see some that it's one thing, right? It's just work, right? And it's only work, and they put everything else to the side. Where it sounds like the book is saying it doesn't have to be just work. You can still do really well at work.
Yeah.
Life is long. Don't sacrifice, your family, those relationships, knowing that life's long. You need them in the journey.
Yeah.
That's what it sounds like.
Right.
Yeah. I love that.
Yeah.
Well, as we wrap, is there one piece of advice that you'd love to share to other CEOs, executives that to you has, really helped you in your career that you'd love to share?
Yeah, for me in my career, and I think it applies. I think it should apply. Like in the businesses that you participate in, that you spend your waking hours, you spend a lot of time at work. Like there's got to be something meaningful, purposeful about what you do, because inevitably there's ups and downs in any business, whether it's established or a startup. And in those moments, for me at least, I always come back to like, why am I doing this? Like, is this exciting to me? Because I could be spending my time doing something else. For me at least, it's like, hey, is this worth me spending all of this energy, physical, emotional, mental energy, trying to make this happen? And that's what draws me to these, getting through the hard days and the days that are exciting, and the team you're trying to instill, some vision and inspiration. But if you don't have that purpose or mission, then I think it's hard in the hard times. You're like, this is miserable, and I'm not sure what I'm doing. So it's almost like an anchor for especially startups, because startups are hard. There's good days and bad days, and sometimes many of them on the same 24-hour period.
Right.
So you have to constantly be reminded of like, why am I doing this, and is it worth my time?
Yeah, the mission drives you through the hard times, and the mission statement can't be more, right? It can't be the mission statement.
And I think that's the challenge: is how do you find that mission statement if you work for a well-established company? And it might mean that you mentor your team differently, or it might mean that you engage with your partners differently. But I think somehow or another,
impacting their lives.
Yeah.
Or you go work for a startup, right? That has a mission that you get excited about, like Rook Capital.
That'll test your mettle for sure. It's exciting. It feels good. At the end of the day, we're going to all be. I don't want to end it on this, but we're all going to be old, and we're all going to be on our deathbed, and we're going to wish we had done something impactful, and taken a little bit of risk. I'm a big believer in making sure you follow what you feel called to do.
Well, I think, and you said it well earlier, that's what's cool about Rook Capital, right? If Rook Capital succeeds, it's the impact that it could have on so many people's lives that may never have had a home, but because of Rook, they were able to buy a home, right? That, they raised their family in for 20 years, or maybe it was less, or they were able to then move into another neighborhood because they actually had equity, right? That impact is huge. So that's something to be excited about. I'm sure the team, that motivates them to wake up every day and work the hours that you still have to work in a startup.
Yeah, it does. It keeps them interested for sure, and it keeps them driving because it's worthwhile. And at the same time, they, just like I do, I want to invest in real estate too. They want to invest in real estate, but it's hard. It's hard to invest in real estate. So if you could do both, that's the kind of the nice intersection of what we're trying to do.
Yeah, and most people that learn very quickly, real estate is not a passive investment, right?
Right.
You're managing everything, you name it, that goes around the house. Where this is actually, it's like an index fund, right? Or it's truly more passive.
Yep, that's right.
Yeah. Well, Ed, this was absolute pleasure again to talk to you. Thanks so much for taking the time. Excited to see what you build at Rook Capital and what the next 10 years looks like.
Thanks, Matt. Really good to see you, and thanks for having me on again.
Absolutely. Thanks, Ed. Take care.